Hello, welcome. This is an update for Genesis World Capital. We're gonna, in this call today, we're gonna be talking about the state of the market. So let's get started. Where is the market at? Three segments that we want to cover. Want to give an update on what's happening at the global macro currency wars. We are having a global currency war with all the central banks trying to tussle and what it means for crypto, right? We are focused on crypto. We have an overview of what's happening in the global market, and our focus is on crypto. Ethereum merge, the successful completion of it, and what it means, what we are seeing after the merge, and the continuing adoption of traditional finance into cryptocurrencies. So many on ramps are being built, and we will look into that. Okay, so what's happening with the currency war? So what's been happening so far in the recent history is that the Federal Reserve has been expanding the money supply, and that money has been going all over the world to find returns, right? Just like because the interest rate in the US is very low, and when Federal Reserve starts increasing the rates, what is happening is that all the money is being called back home, right? With increasing interest rate, the investors don't have to go around the world taking riskier bets to be able to get an yield for their money. They could just put it in very safe treasury bonds. And because of all this dollar coming back home, the dollar is the strongest it has been in the last 20 years. And if you look at the dollar versus the euro, the Aussie dollar, the British pound, all the currencies are getting absolutely destroyed because the dollar is so strong. And again, like the with other currencies, especially in the developing markets like Japan, India, Canada, right? If against Japan, the Japanese yen, the currency has been really, really strong. And also have read about the Bank of England debacle. The British pound collapsed from $27 to $3 earlier. Like this is like maybe 2 weeks ago, and it's about $10 as we are recording this. They had the Bank of England. They had the path of continued interest rate hikes, and they might still do that. We don't know yet. But what happened is that Bank of England intervened in the bond market as a temporary measure to be able to prop up what's happening in the bond market, especially with what some of the pension funds, the British pension funds, were going through. And that came to light with how much leverage this pension fund had. Like, if the bonds are having, 40-50% drop in value, the pension fund should be able to, in a normal world, they should have been able to sustain that. But we suspect they've been taking very high leverage and again looking for yield, and that has caused the Bank of England to intervene. And we believe that it's a similar scenario that every other central bank around the world has to deal with, because we don't know what other skeletons are hiding in the closet. And what does the Fed do with all this, right? The Fed has committed to economic contraction to control inflation. And the Fed has a dual mandate, right? To have stable prices and to have maximum sustainable employment. And if you rate interest rate, the unemployment rate is going to go up. So they have to be aware of both. And our personal opinion is that the Federal Reserve might continue to raise interest rate for the next few months, maybe to 4.755%. And what happens beyond that is very complex to be able to do different scenario playing. We are monitoring it closely. And how do we invest in such uncertainties in this world? And the way to invest is to rely on things that are unchanging in an ever-changing world. What is that? One is the law of accelerating returns. It's a theory by Ray Kurzweil, something that we studied at Singularity University. So what Ray did was he went and looked at the capacity for computation for every $1,000. So what does $1,000 get you in computation power? And he mapped it over the last 110 years. And when you look at the graph, you see it originally started with electromechanical devices. That's where computation happened. Then it became relay switches like vacuum tubes, transistors, and now we are in the age of integrated circuits, We don't know what the next evolution is going to be. However, throughout the last 110 years, if you look at it, it's a very smooth graph, right? It doesn't care about World War One and Two, doesn't care about the Great Depression, it doesn't care about so many other societal changes, all the stuff that's been happening in society. It's a smooth curve, right? Technology doesn't stop, it continues to move forward regardless of what's happening around the globe. And that is one of our guiding principles of how we are navigating this market is we focus on some of these early stage opportunities of investing, and they're going to continue to innovate, right? Even in this bear market, we have made some investments which have done really well. One did like maybe 700, 800% already in the last few months. So those technological innovations are never going to stop. They're going to continue to innovate. And in fact, some of the biggest innovations actually come in a bear market. And if we are keeping our eyes open, constantly looking for these projects that are launching, when the bull market comes, and believe me, the bull market is going to come. This market operates in cycle. And when the bull market comes, we'll be ideally positioned and prepared to be able to take advantage of it. And that is how we are planning to take advantage of the situation. Next, let's focus on the Ethereum merge. We've been talking about it the last few months. It is a feat of engineering, right? It's like a high-speed train that is already running. That's the Ethereum current or the proof of work train, which was already running. And they had to build another train like the proof of stake and move all the people from the original train into this new train. It's phenomenal. I was really surprised by how smooth the merge happened. It was on September 15th. I thought they might have some last minute hitches, but phenomenal. No hitch, nothing, no major issues. They have already tried it out, tested out in different test nets. And of course, it has been talking about it for the last 4 years. So it's taken a lot longer, but the merge itself went without any hitch. And the biggest reason for the merge is to make it very eco-friendly. Ethereum 2.0 cuts the energy usage by 99.5%, right? Before it used to be around 100 terawatt hour of energy consumption per year. That's equivalent to what a country like Scotland would consume in electricity a year. That's what the Ethereum network was consuming. It went from that to 0.5 terawatt hour. And there was an estimate that I saw, it actually reduced the overall world's energy consumption by 0.2%. And this is super bullish from an investing perspective for Ethereum. We had covered about how there is a lot of corporate interest and institutional invest to come into crypto, and they would not touch Bitcoin because of the negative connotations that of energy usage with Bitcoin. And Ethereum is ideally positioned for that. And this, if you look at the transition, so before the Ethereum block time, so what the graph says is the block time is the mean and median block time. So in proof of work, it's more probabilistic. Now you see a lot of variance in terms of block time because you never know who's going to be able to solve the particular proof of work hash. And whereas in proof of stake, it's very precise, right? It's like engineering precision. If you look at it, it hits in terms of every 12 seconds, it just hits the time every single time. So you don't have much variance. I thought that was interesting to look at. And another big change is that the Ethereum supply is overall deflationary right now. And what does it mean, right? So right now, if you look at it, there is about 603,000 Ethereum that is estimated to be released in a year. That's on the right-hand side. And the burn is about 2.3 million. So every year, the supply is going to reduce by 1.4%. And what it means is that the current Ethereum supply, which is about 120 million, it's going to get reduced to 105 million in the next 10 years, by 2032, and further by 92 million in 2042. So you have an asset where there is a supply shock, meaning that the supply has reduced. The emission rate has actually cut down by 90%. So you have a supply shock, drastic reduction in supply, and you have a demand shock, right? You have all these corporates and institutions that are going to be coming in over the next few years. Massive bullish for Ethereum. We still think that Ethereum will get to $25,000 to $30,000 in the next 2 to 3 years because of two things happening at the same time, right? If you just have the supply shock alone, which is what happens to Bitcoin every 4 years, that has a huge catalyst in the price. If you have a demand shock on its own, again, right, that alone will create a huge spike in price. But we're going to have two sides that are going to squeeze at the similar time, and it's super bullish for Ethereum over the short term. And Ethereum, what is next, right? Like, so merge is the first step in a five-part process for Ethereum. You also have the surge, verge, purge, and splurge. Like, now sounds like something from Dr. Seuss poem or something like that. But the surge, each one has a very technical definition. That is when sharding is going to be implemented. It's going to improve transaction speed from what it is right now, which is about 10 to 20 transactions per second, to almost 10,000 per second. They expected to have that done in 2033, but again, merge was expected to be done about 4 or 5 years ago, and it just happened. I still think that there is a possibility for the surge to happen in 2023, but maybe there is another one, Verge, which is to optimize storage. Purge is to remove historical data. There is like a lot of previous data history that is being stored and being providing a way to remove all the historical data. And then some splurge, which is, according to Vitalik, some cool improvements, which is account abstraction. So all of that are still in the pipeline to be done. And if you take a step back and look at it between Bitcoin and Ethereum, Bitcoin is almost, the product is done, right? If you think about Bitcoin 10 years from now, it's going to pretty much look like the Bitcoin today from a technical perspective. Whereas Ethereum, I would imagine, is maybe like 20-30% done. And as Ethereum develops more technical capabilities, it has a much longer runway for it to develop and grow. So, we hold Ethereum in our portfolio and super bullish for Ethereum. Next, let's look at the overall market. The crypto fear and greed index, we are still hovering around 20 or so. We are still in the fear. Over the summer, around June or July, we got close to 45, but we never crossed the 50 mark. So, once we cross the 50 mark and stay there, I think that'll be an indication that we are actually in a bull market. So I personally think that we are close to the end of the bear market in crypto, and we're going to start the projects that are being developed, incredible rate of innovation and development. In a lot of ways, feels very similar to 2020 before the start of the DeFi bull run. So I'm super excited in terms of all the developments that's happening in the space. The Bitcoin hash rate is at all-time high, which is generally good, but we have a price that's coming down. And this plays into our theme of tokenization of pretty much all illiquid assets and all assets. Might have heard me talk about how crypto will become a $250 industry over the next 2 to 3 decades. And one way in which it's going to do that is through tokenization. And this is one step towards the process, and they are mostly testing it out. If it's successful, it has the potential to tokenize other funds that are being offered by KK. NASDAQ has launched a crypto custody service, and it helps institutions and other traditional finance people to use NASDAQ, a reputed, trusted exchange in the equities world, for them to provide custody service. So that's again another on-ramp. BlackRock, it launched a private Bitcoin trust. We covered how BlackRock partnered with Coinbase earlier, and now they have launched a private Bitcoin trust, and it's available to their institutional investors. So we are seeing all these on-ramps that are being built. And you can think of crypto as an island, and right now there is a very small connection, right? There are very narrow roads or single lane bridges to the crypto island. And as we have more and more of these on-ramp, these bridges that are being built in, the demand is there. People are, BlackRock and NASDAQ is doing it because they have pulled their clients, and they are looking for products that NASDAQ and BlackRock is currently not offering. So that's why they are building these on-ramps. But these on-ramps, it's going to take some time for traffic to build in them. So with that, we come to the end of our update for the month. We always love feedback. Please email back. Let us know, what did you like about the update today? What would you like to see more of? What do you like to see less of? That will be super helpful. If you have any questions, please don't hesitate to reach out. Would love to kind of answer your question, jump on a phone call, or be able to help point you in the right direction in case we don't have answers to that. I know it's very turbulent time in the markets. We are keeping track of what the bigger tsunami waves with what the central banks are doing, and how do we take advantage of it in the crypto space. Having said that, thank you, and we'll see you on the next call. Bye.